Hello, everyone. Welcome back to Gold Predicts. Today, we are going to go over the different bull market cycles in gold. And I'm going to explain to you why some decades it is a really smart idea to be deeply invested in gold, while other times it is not. So, right now, we are looking at the monthly gold chart. And back here, if you go all the way back to about 1970, 1971, gold was pegged at $35. That's when we were on the gold standard. Nixon removed us from that, and prices promptly shot up over the next roughly 10 years, peaking in 1980 around $873. So from $35 to $873, that was a wonderful decade to be invested in gold. However, from 1980, the peak in 1980 to around the year 2000 was an absolutely horrifying time to be invested in gold. For 2 decades, you did not make any money. You did not make any money. So, one of the things you need to realize, and this is really going to help you as an investor, is usually when it's a great time to be invested in gold, that means it's a bad time to be invested in stocks. And conversely, when it is a good time to be invested in stocks, it's a bad time to be invested in gold. So I'm going to show you. We're going to switch over to the stock chart real quickly, and I'm going to show you what I mean. Okay, now we are looking at a monthly chart of the S&P 500. So, as I explained before, how gold went from $35 to $873 from 1970 to 1980, look what the stock market did back then. This is the S&P 500. Basically, prices went nowhere. Around here, they were trading around 80, 90, or 100, and 10 years later, they were still around 100, the S&P 500. And that was an awful time to be invested in stocks. They went nowhere. But if you were invested in gold, you made a killing. Now, if you would have switched out of gold in 1980 when prices hit $873, and you put all your money into the stock market, well, you would have done pretty good. From 1980 to 2000, the S&P 500 went from around 100 to 1500. During that same 2 decade period, gold went nowhere. It went from like $873, and I think it bottomed around $255 in the year 2000. So for 2 decades, you lost money in gold, whereas if you would have been in the stock market, you would have made a killing. Now, prices peaked here in .com with the stock markets, but look, for 13 years, they went nowhere. The stock market peaked at 1500, it went down to around 800, then back up to 1500, then back down to 6 or 700, and it wasn't until 2013 that the S&P 500 finally made new highs. So for 13 years you went nowhere. But if you would have been invested in gold during that period, you would have done pretty good. Let me show you. Yeah, so around 2000, prices bottomed, gold bottomed, and had kind of did a double bottom around 255 here. But from around 2001 to 2011, it went up pretty much straight up for 10 years. And that's a nice jump. I think it went up 8x, 800%, and finally peaked in 2011. But then from 2011 to today to 2023, it's really gone nowhere. Right now it's May 2023. Prices closed at $1,944. I mean, that's where they were 12 years ago. So for 12 years, gold has gone nowhere. Whereas if you would have been in the stock market during that period, you would have made a killing. Let me show you. All right. So if you would have got out of gold around here, around 2009, 2010, 2011, 2011 is when gold peaked. So we'll call it 1200. The S&P 500 was trading around 1200, and it's gone up. Well, gold went nowhere. It was flat for the last 12 years. The S&P 500 went from around 1200 to, I don't know, 4200 currently. And it peaked about 4,800. So, I mean, it went up 400% basically, almost, during that period, and you would have done really, really well. So, my point is basically there are decades to be heavily into gold and light on stocks, and then there are decades where you want to be aggressively into stocks and really light on gold. So, now you're probably wondering where we should be right now. Let me explain. Now, if I'm right, I think we are entering another lost decade in the stock market. So we had a lost decade from 1970 to 1980. We had basically a lost decade from 2000 to 2013, roughly. And I think we are entering another lost decade from maybe 2022 to 2032. I don't know for certain. There's a lot of variables, what kind of government policy they're going to do. But for the most part, on a real inflation adjusted basis, I don't expect the stock market to go anywhere probably for the next 9 to 10 years, or maybe more. We'll see. I think gold will perform well. I think this is going to be one of the decades favoring gold, but who knows? Um, there's two types of forecasters: those that don't know they're wrong, and those that are wrong. So I'm hoping to be neither. All right, now I'd like to explain the three phases of a bull market. So the first phase, phase one, that's kind of an accumulation phase where gold prices are more or less dormant. They're not going anywhere. Very few people believe in gold. They don't believe the narrative. They think it's a dead asset. It's a dead market, and nobody wants it, and prices are very low. That is when a few insightful people realize that it's not going to be this way forever, and they start accumulating. That's phase one, kind of the stealth phase of the bull market. The next phase, phase two, is what I consider to be the bull market recognition phase. This is when we'll have strong price rise. Prices break out to new multi-year high, maybe multi-decade highs, and people start to pay attention. They're like, okay, something is going on here. That's phase two. That's when you're going to get some institutional investors coming into the market, and it's going to start making the news and the headlines. Phase three is the most exciting phase of the market, and this is when you're going to get the retail people coming in, and this is where everybody starts to believe the gold story. Prices are making new all-time highs. You're starting to see wild speculation. Things get crazy, and this is where you could get a blow-off parabolic top. That's where just prices go bonkers. So where are we now? In my opinion, we had phase one of the gold bull market was probably from around 2013 to 2019, and prices just based here for like 6 years. It was awful, awful time. You didn't know where you were, but over a few months, you started to realize, okay, I think this is a base. Prices based. They broke out in 2019, and now we're exiting the stealth phase of the bull market. And I think we're about to enter phase two, which again I believe is called the bull market recognition point. And this is when I think gold needs to break above $2,100 to get people's attention. And in my opinion, I think once it does, it's probably going to go straight to 3,000. That's how these markets work. They 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 bump their head against resistance, 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 and then when they break, they're gone. I don't know if that's going to happen in 2023. I think it will, but it might hold off until 2024. But once prices break above 2,100, I think they're going to 2,800 to 3,000 pretty quick. My guess is probably 2024. They'll consolidate for a while, but ultimately, that'll be the transition phase from one to two. And then the final transition phase from uh, phase two to phase three will come later. I'm guessing around the year 2028. And overall, I am expecting a bull market peak in gold around the year 2030, possibly 2031. And I think it could hit $8,000 per ounce US dollars, but nobody knows. I don't know. It's all conjecture. I'm just guessing. This is just based off technicals and prior patterns, but I do have a pretty strong conviction that I think it could hit there. So we'll see. Every day is going to be a little different. Every month is going to be different, but I think this is a decade to be in gold. and I am heavily invested. And if you're interested in gold and precious metals, why don't you come on over, check out Gold Predict, and maybe you'll let me guide you through this process. All right. Thanks for listening. Hope you enjoyed the video. Have a good day.